Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Tesla report for Wednesday, May 22nd, 2024. Let's take a look at the chart. Let's start with this big picture formation. This weekly chart, 222.22, represents long-term resistance. I don't see this as an objective yet. I'll get to that in a moment. And we also have, trend line support that's undeniable at 140.50, but I suspect on the next attempt it's going to be even more susceptible to giving way to selling pressures. This in part because of the longer-term bear market that remains intact below 222.22. Off that July high, we have a series of a series of lower highs and lower lows that defines this trend structure. 222.22. Now, let's talk about when, under what circumstance, we might actually anticipate a test of the 222.22 formation, 221.60 on the daily chart. That would come with a settlement above 196.81, which is a level that may well contain buying into June trade. From here, we could fall away again, perhaps back into, it depends on what's playing out on the chart at the time, but I would say into the lower 160s, perhaps the mid to low 160s, following a test of 196.81. And as it turns out, we are expecting 196.81. We might actually see 196.81 today, this following yesterday's buy signal settlement above the 173.92 formation. Now, what occurred on Tuesday was an open above this channel top, and we continued higher. The same exact thing actually occurred on Monday, and we fell away. And I'm really talking to day traders here because I don't want, the natural reaction. If you bought Monday's open above this structure and then stopped out presumably at some point later in the day, the natural reaction is, well, I'm not going to do that again. And so here we go, Tuesday morning, the same exact setup. This time, though, it works. So what I'm saying is, as long as your risk management is relatively conservative and you stopped out, of course, for a small loss on Monday, if you bought the opening above the 173.92 channel top, opening back above it on Tuesday was not a reason to consider not participating in that trade. You make the same trade again, and this time it could work out. Now, once again, you could have made the same trade and the market fell away and you got stopped out again. That's just sort of the way it goes. But these wouldn't be big losses. And in fact, if you were to buy the open on Tuesday and hold it into the later part of the day, nice trade. And if you did that, pat on the back. On the way up, we also closed Tuesday above the 185.01 channel top. That is a one-week channel structure in itself. Respectable support, assuming we open today above 185.01. If we open below 185.01, I wouldn't call that a sell signal, but just know the market has room to ease back perhaps to 173.92 today. 173.92 able to contain selling into next week, and above which 196.81, I'm going to say, remains a 3 to 5 day target given present volatility. And in fact, if we open today above 185.01, we could certainly see 196.81 today, where we could top out for the day, for the week, and possibly through the rest of May and fall away. Once again, closing today above 196.81 would signal long-term resistance over the next 1 to 2 weeks with present volatility. That is on the daily chart at 221.61. 221.61 on the weekly chart is 222.22. This area considered a 1 to 2 week target if we settle today above 196.81. Until then, 196.81 may well contain buying pressures through the rest of May, and we can fall away again back to 173.92 by the end of next week, possibly to 161.75 within a couple of weeks of testing 196.81. I wouldn't anticipate full longer-term bearish rotation, into the 130s, 120s, 110s over following a test of 196.81. But what I would anticipate, and I can actually describe it now, would be if, let's say, we tested 196.81 today, you could draw a trend line from the April high to what would then be today's high, the Wednesday high of roughly 196.81, and then you cast a intermediate channel bottom at the same rate. And right now, that channel bottom, if you use Tuesday's high is 161.75, but it will change constantly with every new high that we put out. And in fact, once again, if we close today above 196.81, it's probably more like 165 and change. So once we test 196.81, we can fall back into the low to the mid 160s within a week or two, and that would be our downward pivot point. But for right now, let's just say that Tuesday's high of 186.87, I'm talking about a scenario here, not that I'm expecting it, but if we open lower on the day and we ease back to 173.92 today, and that Tuesday's 186.87 high remains, there is a channel bottom here at 161.75 that we're not showing yet. It can contain weekly selling pressures and would be our downward pivot point as we move into June. So really what I'm saying here, and I'm kind of getting all over the place here, that we are bullish for the next 3 to 5 days. By the end of next week, anticipating 196.81. And I really don't turn bearish as we move into June trade unless we were to then close below 161.75. That would then set up the upper 130s once again, that long-term trend line, lower 140s within a few weeks of closing below 161.75. But until then, 173.92 can be bought if you're a 3 to 5 day swing trader. And in fact, holding above 185.01, day traders, 2 to 3 day swing traders can go long, stay long up to 196.81. If we close today above 196.81, I see no good reason to be short Tesla over the next 1 to 3 weeks, because over that time frame I would anticipate 221.61, where certainly a short sale can be made as we move through June and into July trade, and if settled above, would signal the 320s. I'm going to be showing you that soon as a chart that we've got as we know what our target is actually if we were to close above 221.60. Let me talk downside one more time. If we break or open below 185.01, 173.92 is attainable today, where we can bottom out through the rest of the week, and above which 196.81 remains a 3 to 5 day target. Closing below 173.92 merely indicates 161.65 with that kind of volatility probably tomorrow, where we could also bottom out into next week, and if settled below, would be our aggressive downward pivot point into June trade. So 1 to 2 week swing traders, and you could make that case above 173.92 are long up to 196.81, where a long position where profits can be taken, short entry perhaps assumed as we move then into June trade, and if we close above 196.81, we would anticipate 222.22 within 1 to 3 weeks, depending on volatility. I hope this all made sense. I think I'm going to leave it at that for Wednesday's Tesla report. I'll be back tomorrow, of course, with Thursdays, and you have a great day.